Investment
Great.
holding companies have been trading at deep discounts to their underlying assets on the JSE over the last while, and shareholders really are growing restless. How are they going to get alignment with management here? And how can these very important conduits for investor capital, which invest in startups that become the next high growth companies, think here of Naspers and Mnet or MultiChoice, ARC and Rain and Tyme Bank, and PSG and Capitec, just to name a few. How can we ensure that these important conduits for investor capital really start closing that gap and regaining investor trust? I'm sure it's something my next guest thinks about all the time through this crisis. Johan van der Merwe, who's African Rainbow Capital's co-CEO. Johan, firstly, great to have you on the show and on South Africa's biggest business website. What are the challenges that you're finding of operating a business during this pandemic? And for something like a holding company, I think it's slightly different to a manager who's operating on the ground in one of your portfolio companies. How has it impacted you?
Yeah, no, indeed. Obviously there's an impact on us as a company, but we're rather small. We probably 20 employees or so, but we obviously sell very close to our investee companies. We try to support them from a strategic point of view. And it's always easier to sit around a table and have a meeting with people, and these ones we couldn't have in the last bit. So it's been a challenge, I think from our company's point of view. Very soon we put measures in place. We're very fortunate to have quite a big stake in Rain, so everyone was set up at home very quickly with very good internet and connectivity, etc. So that wasn't a problem, and in fact it's worked quite well for us. From the underlying investee companies, we try to keep close to them. Obviously, they were all affected in different ways. Some of them are actually in the essential services part, so they could almost carry on, unaffected. Others, obviously they've still had a cost base, but the income side, it was almost like a tap that you just close and no income coming in because they just couldn't operate. And that was really in the lockdown level 5 and 4. I think from level 3, downwards, things were actually quite, I wouldn't say normal, but at least manageable. From that point of view. But it's challenging, but I think we've adapted to it pretty quickly.
And that theme of adaptation really is one of the big take-homes from 2020 and into 2021, the resilience that most companies and most businesses have shown in the face of seemingly overwhelming odds. I was chatting to Keert van Zyl of Knife Capital the other day, and even a business like Quicket that had its business model premised on selling tickets to live events has managed to find a way back to profitability. It was profitable in October last year again after having its business model completely decimated. In that vein, how do you think COVID has created opportunities out there? What sort of opportunities do you see in the wake of this once-in-a-generation pandemic?
Yeah, I think some of these trends were already there, Michael, but I think, COVID has actually kind of like accelerated some of these trends, just like online shopping, etc. But the main theme for me that came through is that if you, in your assessment of making the investment, chose the right jockeys, the right management team, then that's the thing. It's those people that go and sit down and they say, I can either sit here and blame the world and what's happening around me, or I have to take, ownership of this problem, and how am I going to change my business? How am I going to compete against my competition and be better than them? And that's what we've seen with many of our businesses. And, there may be quite a number of examples, but we were quite astonished as to how quickly some of these businesses adapted to new strategies, to a new way of doing things, the way that they still have their conferences, but it's all online, how people then, came to the party in terms of really still adding value to the business, adding value to their clients, etc. So it's been quite astonishing to see that. And I think for us, the golden thread is the people. It's the management teams. I think where we've seen business is really struggling is the management team's not stepping up.
Yeah. And I know in the private equity space, often when I sit down in front of a GP or a principal at a fund and I say, what is the hardest part of doing a deal, of filtering that pipeline that you get of sort of 200 potential transactions down into 5 that eventually becomes the one that you sign the dotted line on? And you're often dealing with highly numerate professionals in their respective fields, all very capable, but it comes down to assessing the individual on the other side of the table, to really getting to understand the jockey, almost take them out for a beer, go to an event with them, find out what makes them tick. How do you do that in this environment where everything has been, forced into a virtual space? And I ask that being mindful of the fact that you've got a decent war chest, and I'm sure you're going to be out there looking for new opportunities. So how are you assessing those potential opportunities?
Michael, it is quite rightly more difficult, so because I think, and maybe not in 100% of the cases, but I can tell you in 80% of the cases where we thought that we've made a mistake, the mistake was backing the wrong jockey. That's really, and it comes through time and time again, and because that is such an important aspect for us, doing new deals at this point in time where you cannot really spend enough time with people, that makes it more difficult. Yes, we've got a bit of a war chest, but we're also keeping that war chest for our existing investee companies, because one never knows how long this is going to last, what is going to be needed, etc. And it's probably this one time where we would say, listen, it's probably better to sit with a little bit more cash than under normal circumstances, just to be sure that we can really support our investee companies if and when they need it. But on that front, we it was probably a good year and a half ago, Johan van Zyl and I were looking at a deal, and it actually, everything stacked up. The numbers were good, the prospective returns were good, and we sat and we said, but we don't want to do the deal. And we said, but why is it that we don't want to do this deal? And eventually just came up with that we just didn't feel comfortable with the jockey. And, I think it would have been, we didn't do the deal. And I think if we did it, we would have been, probably disappointed today. That's just one of those things. And unfortunately, we don't get it right 100% of the time, but hopefully most of the time.
It's something they can't really teach in MBA schools or at CFA classes, Johan. It is something that's built up through experience of doing deals over many years. That is the art of deal making, as much as there is the science and being able to run the numbers and look at the IRR and do the discounted cash flows and all of that kind of thing. It really does boil down to human interaction. Now, with that said, Rain, and we saw what happened to Rain. It really was provided with a significant tailwind when COVID hit. So much so that it battled to keep up. There was just such demand for Rain and for that kind of high-speed mobile internet. What part of ARC's portfolio are you most excited about right now? Would it be a business like Rain or maybe Tyme?
It will definitely be a business like Rain. Michael, is so Rain, obviously it's got a long-term business plan. We have to roll out, sell the SIMs, but obviously you have to make sure that you've got the coverage as well. So your equipment has to go onto the towers, etc. I think we've done very good deals there through their management team, very, very smart people. But speaking to Willem Roos, he said since the COVID started, he had to, treble his staff complement. So it was one of the companies that really recruited quite significantly during that time, in terms of the making sure that we can service the customers. So where we were selling probably anything between 15 and 18,000 SIMs per month, let's call it December, January, maybe even February. From March onwards, that jumped to anything between 60 and 75,000 SIMs per month. So it was quite high during March, April, May, even June, July, August as well, quite high in the 60s, 70s. Then it actually came down October, November to maybe the high 40s. But since December and January this year, I just got the numbers from Johan van Zyl, who sits on the board for January, and January was the second highest month of SIM sales, in the since the lockdown. So I think it was something like 71,000 SIMs sold.
Wow.
That is fantastic for a business. We thought that we would have 1 million customers, maybe in 3 years' time. I think we're going to have 1 million customers in the next few months, which means that it will be within a year rather than 3 years, which makes a big difference for a company if you can get. We always thought that we'll get those cash flows, but to get that upfront, is much better for any business valuation than not. And very, very excited about that business. And as you mentioned, where very few businesses at tailwinds during this pandemic, but most definitely Rain was one of them.
Absolutely. And the digital economy in general, just this week, we saw the Terraco announcement. They're building a massive 38 megawatt data center here in Johannesburg. It'll be Africa's biggest. So you're going to have your big cloud providers and content providers right here. There's a huge land grab happening in fiber to the home. And I was very surprised doing some research for the private equity deal of the year for Catalyst to find that there's 30 fiber to the home operators. So the market is very fragmented, and it offers chance for consolidation as the market matures. And obviously there's towers and everything that goes with it. So just broadly in that bucket of the digital economy, I think a very exciting time for South Africa. On the other side of that though, in order for us to have data centers and all these good things, we need reliable power. And Eskom continues to be sort of the elephant in the room when we try and forecast out for the future of South Africa. What is your sense with where we are as a country and the kinds of reforms that we need to see to ensure that we can bounce back as quickly as possible from the setback that COVID has provided?
Yeah. So the one issue that really bothers me of the pandemic is, I think an economy needs, spending power. And if the spending power is not there, it's a problem. If one looks at the number of job losses, if one looks at different industries that really suffered during this time, obviously the government had to give out a lot of money. The 500 billion is probably 700 billion today. So those things, it really bothers me how long it's going to take to really get back to normality again. But, I've seen, South Africans are very resilient. They come up with a plan all the time. I think for most, the government, I've got much more, I think, trust and confidence in them than before. I think Cyril is really trying to do the right things, with Tito there, also trying to do the right things under very, very difficult circumstances. Hopefully they've got a strong enough mandate to take the bitter medicine up front.
Yeah.
But then there are worries, state-owned entities, it's not working, if one looks at SAA, Denel, and some others. And, I think one has to be sure that, not more money is spent on that side. When it comes to Eskom, I must say that I've got, a little bit more confidence that the new management team, they will get it right. I also know from a government point of view that they're really serious in getting it right. I think the public-private partnership in terms of renewable energies and so on, I think all those are going to add eventually to ensure that we've got the power in South Africa, because you want to, attract foreign investment into this country to have these data centers here. That will create jobs again. And those are the type of things that we have to get right, is that confidence. And we're not going to get confidence if people think that we're not competent and if we're not ethical. So if we can start getting rid of the corruption, which I think they're really trying to, I think for everyone it's going too slow, but and they want to see people in orange overalls. But, I think slowly but surely, at least It's not in the DNA of the South African to be corrupt. And I was very concerned at some stage that, if it becomes part of the DNA and the fiber of a nation, then it's gone. And I think we haven't reached that stage. And the fact that we've got the Zondo Commission, that we've got, prosecutions are starting to happen, etc. I think we've saved that part of the country.
Yeah, and the receiver as well. Edward Kieswetter doing a remarkable job in very trying circumstances to try and restore the credibility of SARS after it was hollowed out under Tom Moyane. So, yeah, I mean, confidence takes a lifetime to build up. In just a moment, in our case, a lost decade of state capture to flit away. But it is also the cheapest form of stimulus. I want to conclude.
Just on that, I think it's very important. Edward did an excellent job previously at the receiver. He went into the business world, and I think he did a very good job there as well. And I think it's fantastic that the receiver could get him back there to run that. And it's, as you say, it's very, very important to get confidence in them as well, that they're doing the right thing. And unfortunately, the earnings, less, so it's going to be difficult to tax less earnings and so on. But in general, I think it's a very good thing that Edward is back there.
Yeah, absolutely. And for tax morality, I think taxpayers are willing to pay their fair share if they believe that money is going to be used appropriately and not stolen or flitted away on vanity projects like SAA. So, and to your earlier point, it's about competency, ethics, and restoring all of that credibility. And the president has made that one of his primary objectives. From a holding company perspective, there a lot of holding companies listed with huge discounts to their underlying net asset value. And some say, well, it's just an SA specific thing because of the politics we've just discussed. Many of these holding companies are looking to buy back shares to enhance the NAV. It's a bit of financial engineering, really, whereas perhaps we might need more fundamental reforms. What are your thoughts on why we see this big discount to net asset value at the holding company level, and how do we change it?
So I think, some discount is probably, warranted, but I think the very deep discount that we see at this point in time, I have to admit, Michael, that even we disillusioned with that and don't always understand the reasons behind it. But there are a few, obviously people don't like the fee structures. We made it very clear that for a period of 5 years, we're going to have this fee structure because you have to build a portfolio. It takes a lot of effort and cost to build a portfolio. But we always said that after a period of 4 or 5 years, we will revisit that and maybe change that. And I think the portion that people really don't like is the fixed fee. They don't mind the performance fee type of thing because that's that you only get after you've reached a certain hurdle for the investors. So they don't mind that. And we still very committed to do that after the 4 or 5 year period, and so hopefully that will help us at least at some stage. I think people look at it many times. They don't like it that the holding company is actually just a holding company for a bunch of other listed vehicles, and investors say, but I can go and buy that listed company myself. From our perspective, we thought that we're bringing something very different to the market, in the sense that many of the companies that we get the opportunity to invest in would have never been willing to sell if it wasn't for empowerment. And because we're an empowerment company, we actually get a bite at the cherry there. If one looks at the Rains, A2X, many of those businesses, they don't want to sell. They didn't really look for our money, although we are an empowerment company with money, but they were looking for the empowerment credentials, and that's what we bought. And we thought if we can give that kind of like exposure to the public, which otherwise they would not have been able to get to, that would be a good thing. And maybe one has to be a little bit more patient. Obviously, if one looks at Rain itself, if one looks at Tyme Bank, A2X, and quite a few of our other investments, those are already startups. And people want to see that visibility out there. They want to see, the cash flows coming through, etc. And because in many of those who are still going through J curves, they obviously put very, very different valuations on it. Obviously these companies are all valued by outside parties. They get audited by the auditors, and what's going on in the auditing profession. You can just imagine how conservative they want to be, etc. So I must say, and I don't want to bemoan it, but it does hurt when people then start saying, but we inflate the values of our underlying investments because we just want to get a higher fee. If we were those type of businessmen, then we shouldn't have been around for the last 30 years or so. But I believe that once there's more visibility, then I think investors will look differently at us. We've got an added issue, especially because we've got a large contingent of private companies in ours. I mean, the last thing that we want to do is to be a listed vehicle for other listed companies, although we've got the likes of Alexander Forbes, etc. But there we've got more than 35%. It's a very strategic stake. It's a very important cog in our financial services side, and so on. But I think on the private companies, I mean, and let's take for instance Rain. So Rain's got very good strategies, plans, etc. But and then the analysts want to know a lot of the information there. Now, I sit with Willem Roos, he's the CEO. I said, Willem, I want to say all these things to the board. He says, I don't want to. I said, why not? He says, because I'm not listed. He says, Vodacom has to tell the market everything that they want to know. MTN has to do it. I don't have to. Yeah. Just because you have a 20.6% stake in me and you listed, now you want to actually want me to lift up my skirt and see everything. Like, no, I don't want to. And that's why we have to tread a very fine line between, obviously you have to give information to the market, and we want to, but there's a fine line as to, what's the kind of like competitive advantage that you also have by being an unlisted business, etc. But hopefully, the end of the day, the proof is going to be in the type of returns that we can actually generate from this portfolio. And hopefully when that comes through, at least the discount will narrow to, let's call it 10-15%, and not sitting at the 50% plus where it's at the moment.
Yeah, which is where it should be, and just to take in the layer of management costs. But the deep discount is obviously a big talking point in markets at the moment. And like I said, not just ARC, many holding companies at the moment. So something deeply systemic. And I suspect something also quite unique to the South African market and the lack of confidence that we've got here at the moment as well. So back to your earlier point, if we can start to see confidence returning into this economy, we did see a bit of a rally in the smaller mid caps towards the middle of last year on the back of that. Then we could be having a very different conversation as we approach 2030, the National Development Plan and the big goals there. It is now just a question of delivery, certainly on the political front. And I think the two big words for me this year are vaccine and Vulindlela. I'd like to hear a lot more about Operation Vulindlela from the President at his State of the Nation address. As a final pointed question, what do you think the President's theme should be for the State of the Nation this year, if you were advising him?
Yeah, I think it's going to be job creation. At the end of the day, people have dignity and they can live with dignity and fend for their families if they have jobs. For me, that is the most important thing. Now, there are a lot of things that have to fall in place to do job creation. But for me, and then job creation, it starts back from education. So I'd really like to see the education part. Besides the vaccine and the pandemic and what he's going to do to give the South Africans at least the comfort that the government is going to do the right things around that. For me, it's going to be education and job creation. And I really do hope that he gives us something on the SOEs and how they're going to handle that. Either sell it off to private, but, to keep on pumping billions and billions into that, which is just not working. That is really hurting us a lot in the international community as well.
Johan van der Merwe, CEO, co-CEO, I should say, of African Rainbow Capital. Thanks so much for sharing your insights into a whole range of issues with us here on Business Talk and Business Tech. And good luck with steering your portfolio company through what is going to be another challenging year in 2021. Take care.
Yeah. Thank you very much, Michael.